Hello, everyone. A very happy new year to you all. It's the first show of 2023. We're going to get kicked off with a bang. So, welcome to the Market Report, where I am again joined by our resident experts, Marcel Peckman and Sam Borgi. Sam Borgi is a business editor at Cointelegraph, where he brings a decade of experience in economic analysis and financial market writing. Marcel Peckman applies 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. Now, today's show is sponsored by Web3 Antivirus. It's a security solution that helps protect users from online threats and scams on the decentralized web. Hello, gentlemen. Happy New Year to you both. How are we doing? Marcel, is the sun shining in Brazil?
Well, Joe, unfortunately, for the last week, not so much. I went to the beach like 2 weeks ago. So at least I enjoyed 3 or 4 days of sun, but not after that. But as for the cryptocurrency markets, I'm kind of excited. I think I still seeing too much hopium. The bull run is about to come, and etc. I've been over here for 5 years, and I know how people want things to happen in a short time frame. But that's not how market usually reacts. Things take a long time to people understand the value of decentralization of Bitcoin, what smart contracts can do, what is the potential of DeFi. It's not going to happen overnight. So my first message to the viewers is stay calm.
Okay, very good. I only ask you that question because I'm back in the UK and I'm wearing 2 jumpers. Sam, how are things with you in Canada? Happy New Year.
Very happy New Year. Things here are pretty status quo. The weather isn't the best. Marcel went to the beach. I've never been to a beach in Canada ever because what the hell is the point? And I echo Marcel's sentiment. I mean, people seem to be really excited. I mean, yeah, Bitcoin saw that massive bounce from 16,800 to 17,300. Wow. I mean, earth-shaking stuff, right? Yeah, I'm not really even paying attention to that right now. But it's fun to speculate. I am cautiously optimistic that we are in the process of bottoming, and that 2023 could be a positive year for Bitcoin in terms of year-over-year price growth, but we still have almost 12 full months to go, so that's a very premature prediction.
Okay, fantastic. We've got a few friends dropping into the chat as well, a couple of Cardano fans, and here who's for the hotties. Queen, who's here for the hotties. That must be you, Marcel. Great. Now, as you probably have gathered, today Sam, Marcel and I are going to discuss what's been making the headlines in the crypto space, as well as the wider business and financial markets. Most importantly, though, we're here for you guys, our loyal viewers, to try to help you navigate through these trying and sometimes pumping times. We're looking forward to interacting with you and answering all your questions or concerns you might have to the best of our ability. We are also giving away a 1-month Markets Pro subscription, which is worth $100. So please make sure you drop a comment down below or click the like button or subscribe so we can keep the conversation going, and you might win that Markets Pro subscription. Now, quick breakdown of today's show. We're going to kick off with a market roundup, which is the weekly highlight video, going into the meme time. So it's a good opportunity to have a laugh. Market news updates, a quick crypto tip from me, one of Marcel's expert trading tips, and finally a Markets Pro tip, and finally the giveaway. So don't forget about the 20% off the Markets Pro link in the description as well. And let's get it kicked off with the weekly roundup video. Take it away, Danilo. There it is, the weekly roundup. Very useful to me in particular, as I spent the past week on holiday. So it's really good to see what's actually going on in the crypto world. I kept up to speed somewhat, but Cointelegraph's reporting is, the place to go. Go ahead, Marcel. What's up?
Joe, I have a question for you guys. This guy, Andrew, who is giving some hot insights on the DCG stuff, on other cases, where did this guy came from on Twitter? Never saw him before, and suddenly he's one of the main informants of the crypto space. Have you seen him? Where is it?
And I'm actually looking him up on Twitter right now. Which Andrew is this?
It's the one that posted about the DCG, saying that that
where has he
Barry
come
was
from?
Barry was an insider on a FTX case. They knew it was insolvent and etc. He's giving lots of affirmations. Some of them eventually turn out right, but I'm always kind of skeptical when these figures emerge out of nowhere with information.
Yeah.
So I don't know.
Well,
I mean, it reminds me a bit of the.
They're always emerging out of nowhere, right? I mean, every crisis you have, people kind of come out of work and make a name for themselves. So I've never heard of him before, and I've only seen his name, a few times here and there.
It reminds me a bit of Tiffany Fong and the FTX crisis. She was this figure that became more and more popular. She became like the flavor of the month during the FTX scandal because she was actually one of the people that was effectively wrecked by FTX and Celsius and took it upon herself to start investigating the case. Is there this sort of thing going on with Andrew? Is he also someone that is personally involved or intertwined with Gemini?
I mean,
Gemini.
The great thing about Tiffany Fong is that she's done some really good reporting, and she was affected by the whole Celsius meltdown. And then for whatever reason, Sam Bankman-Fried started talking to her, and for a little while there, I think she was the only one he was talking to. So I think that's a different case with this Andrew person. I think it's an anonymous account, perhaps, and I'm not sure it's the same thing, but who knows?
Okay.
My advice to viewers is doubt every information you get that it's not from a reliable news source. There's too much FUD and misinformation, especially on the cryptocurrency industry, and I don't think that anyone can say that, DCG knew back in May that FTX was insolvent. This sounds crazy. Like back in May, they were raising money at valuations of $80 billion. So I don't think anyone could have known they were insolvent.
Yeah. And furthermore to that point of doubting reliable news sources, I think doubting people, I think you should doubt the reliable news sources even more and even greater because they can influence decisions and they can use their clout in certain ways. Really interesting start to the show already, guys. That was very cool. Should we jump straight into the meme review, or do you want to discuss a little bit more what's happened in the week? Meme review?
Let's jump.
This meme, it always looks good there, doesn't it? Oh dear. Where is he? Is he somewhere in Nigeria? Oh, it looks sub-Saharan Africa vibes, but yeah, very, very fire suit. So this boss is for disabled people only. 9% of my portfolio is in Dogecoin. It's even spelt wrong. Sorry for bothering you. Oh, shots fired at the Doge army this week. Sorry, loyal.
I think Shiba is worse. I think if it's Dogecoin, I would let it go, let it slide a little bit. But Shiba, no, there's no way.
Congrats on avoiding FTX. Me with all my money in NFTs. Yes, true. Oh gosh, yeah. I mean, yes, you can hold an NFT and you can send it to your Cardware wallet and you can take proof of that receipt, but it's still just a picture or a piece of music or whatever it might be. So careful out there with NFTs, guys.
Yeah, I saw this one. Yeah.
Sam Bankman-Fried over. Who's the guy originally who's in this outfit? Where's that from?
I don't know.
I don't know. Random guy.
I mean, the B is definitely fake, right? The B on the chest is superimposed, but the rest of the outfit looks like something Ali G would wear. Cool. There we go for the memes. Good to see the FTX or SBF even, Sam Bankman-Fried, is still making headlines and memes. 9 or 10 weeks since the FTX sort of debacle unfolded. We haven't moved on to the next big thing yet in the crypto world, have we? Maybe it's going to be this DCG, Barry Silbert, the Gemini case that's unfurling with this new guy, Andrew, at the helm. Let's see how that develops. Just before we move on to the next segment, I'm going to check the chat and to see if anyone else is checking in, say hi. Oh, there we go. We do have more Cardano fans in here. Ali G, yo, check it. Yeah, Ali, if you haven't seen Ali G before, it's one of Sacha Baron Cohen's characters before he created Borat. You guys presumably have seen Borat or know of Borat. But yeah, Ali G was one of his former characters. Okay, niche comedy knowledge to one side. I think we could probably check into the first article of the week, which I think Marcel is going to share a screen on. It's all about how Bitcoin price has hit 3-week highs thanks to a positive CPI reading. So, what have we got here today, gentlemen? We've got, as Sam alluded to in the introduction, we are back into $17,000. So it's champagne and steak for dinner, everyone, and fireworks. And on top of that, the US CPI print, or the Consumer Price Index, was relatively favorable to the markets. But I think markets pumped more, or traditional markets, when I say markets, pumped more than the Bitcoin and crypto markets. Why do you think that is, Sam? And does that mean that there could be more of a Bitcoin pump to come, if we can call this thing a pump?
So we know that the CPI report is forthcoming. It's going to be released later this week.
Oh, sorry.
And I think investors in general, the consensus is that the annual or the year-over-year CPI reading is going to be lower than it was in November.
Mm-hmm.
So again, this adds into the narrative that we're already past peak inflation. And as inflation begins to wane, the Federal Reserve can start to relax the pace of its rate hike program. So I know that the options market and the swap markets right now seem to be predicting that the Fed will still raise rates, but at a slower clip than the 50 or 75 basis points that we've seen, which means that we could be nearing the end of the tightening cycle, especially as the federal funds rate approaches the 5% mark or exceeds that slightly. I think that's one of the major catalysts that we saw in the equity rally at the beginning of the week, and that also spilled over into the publicly traded Bitcoin miners as well. Some of the Bitcoin miners rose sharply during yesterday's session, and that probably has something to do with short covering as well. But I think that's the general narrative around the Fed, and the CPI print is coming out, I think, Thursday morning, U.S. time, and we're expecting to get a reading of 6.5% year over year in December versus the 7.1 previously. So I think that kind of encapsulates where we're at with respect to market expectations and why we pumped early in the week.
Okay, so it's the old buy the rumor, sell the news sort of thing playing out here. What do you think, Marcel? Is this cause for celebration? Can we get excited about the new bull run?
No, Joe. I think Bitcoin has been tracking the S&P 500 index futures play by play for the past 30 days, for the past month. So there's really nothing to see here as for crypto market movements. As for the Fed funds and the Federal Reserve interest rates, you got to remember that number, that decision, will decide the fate of $53 trillion of bonds either issued in the US, while the crypto market capitalization stands at 900 billion. So it's less than 2% of the bond market in the United States. And we're not even counting the derivatives or offshore issued in Europe, in Asia, denominated in USD. So I do think that unless something really major happens in crypto, either for the positive side, like ETF approval or Microsoft buying $5 billion worth of Bitcoin, if we don't have a substantial movement, we're going to keep on tracking traditional markets for the next 6 months. And it seems to me that the recession is the most expected result by the investors. And if we see a recession, then we won't see a bull run for crypto.
Yeah, no, I know what you mean. It's funny you say that. There is this possibility or outside chance that a big player or a big investor or even a multi-billionaire can move these markets, considering how small they are. I was watching a piece about, or a video about, Ethereum's bull case until 2030, and because the Ethereum market cap is so small, you could have a Bill Gates or a Elon Musk. Sorry, I'm quite jet lagged today. Who decides to allocate, a small percentage of their portfolio to one of these asset classes, and before you know it, they skyrocket. That's not to say buy Ethereum or anything. Like I really don't believe in that project whatsoever. And this is, of course, my opinions, not financial advice. But it does just go to show that you can have one piece of news, and all of a sudden, this small industry can turn quite quickly. But I think the possibility of that is still quite remote. And the overall trend, as you rightly point out, Marcel, is that Bitcoin is basically tracking the S&P 500. And what about inflation, Marcel? I think you tapped into it a little bit there, but is this still what most people are concerned about? They go into the shops, they fill up their cars, they're buying gifts, whatever it might be, and they're thinking, gosh, this is expensive. I can't wait for prices to come down or my salary to come up.
That's a good question, Joe. Yesterday I saw a TikTok video of a girl on her car complaining that she and her husband would earn together $100,000. I don't know if it was Canadian or American. It looks like Canadian. $100,000 worth per year, and she was not being able to afford any luxuries. She said she spent like $7 to buy eggs. She just spent $70 in the supermarket in 2 years before. $100,000 could have a great life in her country, and not anymore. So I do think that this, especially in US and Canada, those economies are based on consumption. They need auto financing. They need to buy new houses. There's need consumption for the economy to grow. And when the salary doesn't grow as much as the inflation, as we've seen over the past 2 or 3 years, what happens is that the money available for the consumers to use goes down. So I think inflation is not a major concern right now, at least for the Federal Reserve. I think recession is the biggest concern. If the companies start firing people, letting people go, just like Amazon did with 18,000 employees, I think that's the worst thing that can happen to economies. And to solve that, the only way out that governments know how to do it is to print money. And when they start printing money again, and it's a matter of time, it's going to be a good time to be holding cryptocurrencies.
Excellent. Well put. I mean, I think there's a really interesting chart showing the price of eggs in the US over the past couple of years, and it was hockey sticking higher and higher. So if you have hens at home, hodl those eggs. That could be the next Bitcoin. Not financial advice, of course. Okay, and the final thing that Mr. William Suberg's article pointed to was regarding DCG, or Digital Currency Group, which is turning to face the music, or publicly facing the music, as the article points out. We mentioned this in the intro to the markets report video today. What is going on here? If you could condense this into a nutshell over the past this scandal started kicking off in mid to late December, I think. What's going on, and why should we care about it? What do you think, Sam? Can you put this story into a little nutshell for us?
Well, there's so much going on right now with DCG, and I think it came to a head perhaps last week when it was Cameron Winklevoss basically penned an open letter to Barry Silbert, who owns DCG, or was the CEO, and basically complaining about Barry essentially, dragging his feet on Genesis withdrawals, which at the time was about 47 days still pending. So I think a lot of the issues around DCG have been over the Grayscale Bitcoin Trust. And it seems that DCG maybe have been overly exposed to some of the contagion effects that we've seen in the market over the past 6 months to a year. We know that Barry used to be very active on Twitter. He's kind of gone quiet. And we're beginning to speculate about the health of DCG's underlying assets and businesses. So last I've heard of the whole situation, the company DCG, that is, could be under investigation by the Department of Justice over transfers between DCG and its subsidiary firm. I think it's Genesis Global Capital. So where there's smoke, there's fire. I think there's a lot of issues or concerns around the Grayscale Bitcoin Trust, but that seems to be growing beyond that. And now there's concern about the underlying health of DCG. We know that it's becoming very public now, the debate or the conflict between Winklevoss and Silbert. So is this another domino that's going to fall? I don't know. It's hard to speculate. But if the investigations are ongoing, as the reports suggest, it can't be good.
Yeah, no, well put. And I think the fact that they're airing their dirty laundry in public as well it could be distraction tactics. It could be, oh, look at us putting up this big show of trying to defend our investors and our customers' interests, when in reality we're sorting out a backroom deal. I think that the tweet that Marcel just shared there showed that Cameron was saying we need to remove Barry Silbert, the CEO of DCG, effective immediately, and replace him with someone who's going to get us out of this mess. But it makes you wonder, okay, if he's tweeting that for the world to see, what's going on? What are we not privy to throughout this whole debate? Should we bring up the next article regarding the DCG case as we discuss it, and bring in Marcel and also Colin Green's question there from the chat? That might be a way of approaching this thing. But let's just bring up Cardano Green's, Cardano Green's question there. So Bob Lucas suggested that the contagion for an insolvent DCG is long known and priced in to the crypto market. So yeah, Sam just said that this could be a domino to fall, but even if it is a domino to fall, maybe that domino is already priced in. Marcel, what's your take?
Joe, I think the point here is DCG owns Genesis,
CoinDesk.
right? Yeah. Yeah.
So I just had to get that in.
But they own also the Grayscale funds. Is that it?
Yeah.
Kind of last year after a week.
And Luno and a few others.
Yeah. So there's $10 billion of Bitcoin sitting on those funds. So the fear of the market is that if DCG is insolvent, then those $10 billion worth of assets will be forcefully sold on the market. I haven't seen any attorney, any experts citing this possibility. Yes, they seem to know that the fund might be dissolved, which means either the shareholders will get their BTCs, their Bitcoins, and they can do whatever they want to do with that, or the fund will be simply be sold to another manager. But I don't think there's any possibility that those shares and the Bitcoins will be sold at market or sold in a rush within a week or a day. There's no previous ruling or similar case with such an outcome. The regulator and nobody wants to damage the holders of the fund who have nothing to do with DCGs. So I think this fear is purely FUD. I think that the discount of the GBTC, which went down to 50% and it's now sitting at 35, 38%, tends to improve in the long term as the situation will eventually resolve itself. But it could take 2 or 3 years.
Okay. Yeah, I mean, I guess the fundamental concern here is, what does this all play out on the price of Bitcoin and other assets? And I guess a secondary question is, because we know that some other exchanges over the past year were doing really naughty things. Well, I say naughty, I mean completely illegal things with Bitcoin, such as, FTX, who said they custody your Bitcoin, but in reality, it was just paper or fake Bitcoin. So I guess some people might be worried that, GBTC isn't even custodying Bitcoin. So all these sort of things play out, particularly in this space, which is sometimes the companies in the space are hard to read and hard to see through. What would you recommend that what would you recommend that people should be doing right now with regards to this story? Is there any actions they should be taking? Is there anything they should be reading or learning? Is there anything we can do to help the viewers at home watching this who might be a little bit concerned? We just got a comment in the chat saying liquidity crisis incoming. Doesn't sound good, does it? Sam, any tips?
Well, Anon, I'm not your financial advisor. Keep that in mind. But there's really not much for us to do right now. If you're stacked with Bitcoin and you're hodling Bitcoin, what exactly is the play here? Are you going to go and become a degenerate trader and go down that rabbit hole? Or are you simply going to hold your assets responsibly and just wait it out? I mean, the buy and the hold strategy is by far the most effective investment strategy ever, right? If you have a penchant for trading and you're knowledgeable about trading, then that's a different thing. Typically, traders have a portion of their portfolio to trading, and that's separate from their long term holds. Right now, there's really no signal that I can see about what to do with Bitcoin from a short term trade perspective. Have we bottomed? It's possible. Could there be another flush? It's possible. Does it really matter in the long run? In my opinion, no. So for me, it's all about understanding what your risk tolerance is, what your strategy is, and don't get too bogged down with the day to day because it'll drive you crazy. And not only that, it's not. There's no actionable investment insights to be gleaned right now. There's a lot of turmoil in the market. If you believe in Bitcoin, if you have concerns about the financial and monetary system, you want to diversify into Bitcoin, possibly. If you don't think there's a problem with the financial system or the monetary system, like when I was heckled in Toronto a few months ago about that, they told me, well, we have monetary policy to take care of everything. They can simply lower interest rates, raise interest rates, and we're fine. Okay, there's really nothing for me to say in terms of, the chasm in our worldviews are so wide. There's nothing for me to say on that. But if you believe that the current financial system is fine, all it takes is to manipulate interest rates up or down, you don't need Bitcoin then in that case. Fine. For those of us who are concerned and we want to hedge, we have our Bitcoin. Nothing for me to do but hold and stack until the future. And the future's not going to be that far away because Bitcoin moves in cycles, as we've seen. And we have a halving coming up in about a year and change. And we're off to the races again after that, possibly.
Yeah. Yeah, very good. It was actually last week, it was 69,420 blocks until the halving, which is, of course, a very significant meme milestone on the way towards the next halving. And with regards to sending your Bitcoin to cold storage, there is a fantastic video on the YouTube feed for Cointelegraph, an interview with James Check, who's the lead analyst at Glassnode. So if you want to know about self-custodying your Bitcoin and how to store it safely, then do check that out. Marcel, any other tips? I see Queen here in the chat said hodling until 2030. That sounds like, pretty diamond hands right there. It's a whole 7 years away. What do you think?
I think that bear markets is the time for you to learn. It's the time for you to make mistakes. So when the bull market comes, you don't get scammed. You don't get holding the GBTC instead of BTC. You don't end up buying Bitcoin Cash instead of Bitcoin, or you don't lose money on a Ethereum bridge like the wormhole and $900 million went missing overnight. So if you're gonna learn DeFi, if you're gonna learn how to self-custody, start doing it now with small amount of money. So when the bull market comes, you're ready.
Yeah. Very, very good advice. Okay, I think we've talked the DCG story a little bit to death now, so we could move on to the final point today, which is a bit more lighthearted, and which again shows just how early we are in this whole decentralized movement. We found a way to decentralize money. It's called Bitcoin. Now we're looking at decentralizing other things, and there's lots of interesting experiments coming out. However, very respected and people that are put on pedestals within society, within modern Western society, people such as Peter Zeihan, have shown their lack of understanding for Bitcoin and magic internet money. There's this piece which I think we're going to pop up on the screen here, which is called "Bitcoin Community is Not Happy with Peter Zeihan's Criticism on the Joe Rogan Podcast." Now, I'm probably butchered the pronunciation of Peter Zeihan. Please do correct me if I'm saying it wrongly. I saw lots of videos of this circulate around the internet while I was on holiday last week. And his biggest argument is that Bitcoin has no intrinsic value and will go down by 17,000 more, i.e. it will become, because when he said it, Bitcoin's price was $16,000, it will become negative $1,000. So he would in effect pay us to get rid of our Bitcoin. So there's maths for you, who's just demonstrated his maths. And as you see, he is an American geopolitical analyst and author who has also claimed that crypto is a hot dumpster fire. That I could probably get on board with, as long as we separate Bitcoin and crypto. But he loves this idea of intrinsic value, as if intrinsic value is a thing, and it's always been a thing, and it's something that we aspire to. I really find these two words put together really quite troublesome. Marcel, you're scratching your head there. Can you tell me anything that has intrinsic value? What is intrinsic?
Water and food. Other than that, and powder. Water, food, powder. But other than that, nothing has intrinsic value.
Okay, well, there you go. And what can you get for water, powder, and food? You can get it with Bitcoin. I can give you a few shops for that. Okay, should we scroll down through the rest of the article a little bit and perhaps examine why the community was so upset by this? But the context of this is also important. Joe Rogan's podcast is the world's biggest, and as Sam pointed out in the talk before this YouTube video today, it was $100 million deal that secured his exclusivity on Spotify. So he's a very well-paid, very influential podcaster.
I like this line. The craziest thing about Bitcoin is that there will never be more than X number of units. By default, it means it can't be used for trade.
And he then expounded on that point and said, and that means that the price will just go up. And Joe Rogan agreed and says, yes, it will. And so, a lot of people watching this were thinking, well, that's bullish. He was inadvertently singing the praises of Bitcoin, saying that because it's scarce and it has this cap, that the price will go up over time. So it was amazing mental sort of gymnastics that he was playing out there. Sam, please shed some wisdom on this conversation.
Yeah, well, he obviously doesn't understand that there's a difference between needing an expansionary money supply and needing divisible sound money. We need divisible sound money, not necessarily an ever-expanding money supply. But when he was talking, I basically relegated him to a Keynesian. He speaks like a Keynesian. He looks like one. If it quacks like a duck, if it looks like a duck, it's a duck. So for me, it's a typical arguments around the intrinsic value. Of course, your ad hominems, your Bitcoin is a dumpster fire. If it can't be used for international trade, because I don't understand that Bitcoin is divisible and that we have sats, and those could also be used to facilitate trade. I don't have to necessarily trade in one full Bitcoin. If Bitcoin continues to gain mainstream adoption, that won't be needed, right? It's going to be an alternative to the current financial system that we have. And maybe it doesn't replace the fiat system. I don't know. I mean, I'm not going to sit here and give a prediction. But when you say it has no intrinsic value and it's funded through voluntary participants globally, creating liquidity for millions and millions of people, allowing for instant digital transfer around the world, stabilizing the energy grid, providing an alternative to the centralized monopoly of money, but it has no intrinsic value. That basically is the clown world that we live in, and the clown world that basically has people like Peter who defend the current monetary system and degrade Bitcoin. But the great thing about Bitcoin is that it invites this kind of attack. Do you know very many people who have a neutral opinion on Bitcoin? Like, who just say, I don't really care about this. No, it usually invites a very strong opinion one way or the other. Everyone's talking about Bitcoin, from the central bankers to the financial system to businesses. It forces you to have an opinion, and Peter's no different. But I don't really buy into any of his attacks.
Yeah, exactly. I mean, I would love to, invite Peter to my home and show him my heaters. I'm heating my house with a Bitcoin miner right now. I mean, that seems like pretty good value. My electric heater was more expensive and also didn't mine me Bitcoin. So that seems to be pretty valuable just to me personally. And if you look at some of the global examples that Sam just brought up, also introduces property rights to lots of people. It helps to bank the unbanked. It helps to, provide this financial security to people that have never seen it before in their lives. And I think it's not just a Keynesian point of view, but it's also a very privileged point of view, and a Western privileged point of view. So I think it's almost insulting sometimes when you see these people come on who say, "Yeah, I've seen this Bitcoin thing, and it's terrible for these XYZ reasons." but he's probably at 1 hour of research into Bitcoin, or at least this is my sort of superficial take of the situation. Who would you like to see on Joe Rogan, gentlemen? Marcel, who would be your top 2 Bitcoin or crypto people to get on the Joe Rogan podcast?
I don't know. I love Saylor. I think he's one of the top-notch guys in Bitcoin, and he was the longest running CEO of a publicly listed company. So even if you don't like him, he was MIT or whatever. He has the credentials. So I think he should be the person people should be listening, or not some random podcaster who hasn't had real experience of managing a company with 500 employees with revenues of hundreds of millions of dollars per year. So I think Michael Saylor is our guy.
Okay, yeah, no, I agree with that. I mean, I know he had Andreas Antonopoulos, the one of the really early Bitcoin OGs, on the podcast in I think 2014 and maybe 2016, but that's 8 years away now, and it's 8 years ago. Sorry. Sam, what do you think? Who should come on Joe Rogan as the Bitcoin advocate, or someone who understands Bitcoin fundamentally?
Very easy answer. He should bring Seyfedin on. Seyfedin Amos.
Ooh.
He would knock it out of the park, because the Fiat Standard was a bloody brilliant book. People talk about the Bitcoin Standard. Bitcoin Standard is fantastic, but the Fiat Standard is absolutely fantastic. So what Seyfedin can do is he can explain the merits of Bitcoin on the technical side, but also on the economic side. And then he could draw parallels to the issues that we have in the financial system, in the fiat system, and the issues that Bitcoin solves or is trying to solve. So I think Seyfedin would be the perfect candidate to go on JRE and just really explain that. Don't bring back Peter Schiff yet. Just bring back Seyfedin first, then bring back Peter Schiff if you want.
I like that, because then you can be like, oh look, I've done both sides. I've been unbiased and fair. Cardano Green just gave a great suggestion. Nayib Bukele, the president of El Salvador, he strikes me as being very much, he gets Bitcoin, but he's also a politician and a president, and all that represents is quite anti-Bitcoin. Bitcoin is not exactly pro-state as money. The whole point is to separate money and state. Marcel, you're shaking your head. Nayib Bukele, not the one?
No, not our guy. Not my guy, at least.
Not the guy. Okay. Sam, Bukele?
I don't know if he's the best Bitcoin communicator. He should be focusing just more on his country right now, and instead of going on the JRE podcast promoting Bitcoin or pumping Bitcoin. So
yeah. It would be a rogue move, and it would further play into the narrative that El Salvador's Bitcoin adoption was just a great big PR play for Bitcoin. It wasn't actually about Salvadorans. So yeah, maybe not the one. I like those two suggestions though, Saylor and Seyfedin. I think I still haven't read the Fiat Standard as well, so I'll give that one a look through over this weekend. Cool. Back to the show. Thank you very much for the comments in the chat, everyone. Don't forget to click like and subscribe, and there's also 20% off Markets Pro subscription in the description just below. We're now going to jump to a quick crypto tip, courtesy of yours truly. And this week, we're going to be talking all about chasing the whale. So, large price movements. I'm on the screen. Price movements are largely driven by whales. So these are individuals, but most likely groups, who have astronomical funds with lots to trade with. So some whales operate as what's called a market maker, and they set bids and ask on both sides of the market, so buy and sell, in order to create liquidity for an asset while turning a profit in the process. It's kind of like market manipulation, for want of a better expression. So whales are present in virtually any market, from stocks and commodities to, of course, Bitcoin and cryptocurrencies. A crypto strategy, or a crypto trading strategy, must therefore be aware of the tools of the trade favored by whales, such as their preferred TA indicators. Simply put, whales tend to know what they're doing. They've got big amounts of capital and they know where to distribute and allocate it. So by anticipating the intentions of whales, a trader can work in tandem with these expert moves to turn a profit with their own strategies. And this is actually something we talk about quite a bit on Markets Pro. And you can win a subscription to Markets Pro today just by leaving a comment in the section, or for messaging us on Twitter, for example. And don't forget to click your 20% off Markets Pro in the description down below in the chat. Okay, back to the program where it's a new year, it's a new video, and we've actually got a sponsor. So I think we're going to check in today with today's sponsor, which is all about Web3. Okay, got a sponsor in the house. This is new. It's exciting for 2023. Wicked. We're now going to head over to Marcel's ring, all about crypto trading and how to stay sane in the market. Marcel, take it away.
Okay, guys. So before we start any analysis for 2023, it is essential to clear up some typical misunderstandings. For instance, I've been reading a lot of posts suggesting that the bull market will not return until the stablecoin supply reverses its trend. So Danilo, I want to share my screen here, please. So the main stablecoins are Tether USDC coin from Circle, Binance USD, and DAI. So ahead of the Terra Luna collapse, we had an aggregate supply of $190 billion worth of stablecoins. So that was back in March. But it went downhill from there. Like currently we're sitting at $137 billion. And truth to be told, Tether has been pretty flat with $66 billion over the past 6 months. But all of the other stablecoins, they lost. Like USDC coin lost $7 billion of supply, and the remaining competitors another $6 billion of supply. Thank you, Danilo. So the first question you should ask is, why does anyone buy and hold a stablecoin? The answer is easy. So for starters, if you have money sitting on an exchange, you need stablecoins. You don't want to buy cryptocurrencies and you want to leave the money on the exchange, you need stablecoins for that. But more importantly, the traders located in China, they don't have direct access to exchanges. So they need stablecoins, either buying on P2P, OTC traders, or international payment gateways. So first they buy the stablecoin, then they send it to their exchange of preference. And there's also the market makers who do arbitrage trades, and they desperately need to quickly move funds. And the only way to do that is using stablecoins. So there's a multitude of factors linking the higher crypto activity with the stablecoin issuing. It doesn't mean that one precedes the other. If there's higher crypto activity, there will be stablecoin printing. And the other way around in bear markets. So if there's less crypto activity, there's less need for market makers. So less stablecoins issued, for example. So on to the most pressing topic. Will there be a stablecoin issuing ahead of the next bull run? Well, not necessarily. For instance, if it happens due to leverage traders, those trading futures contracts on the derivatives exchange, if there's a bunch of people betting on Bitcoin going down to $14,000 or $10,000 and it doesn't happen, Bitcoin price goes up 10 or 20% in a day or in a week, those shorts get liquidated. So those exchanges are forced to market buy to cover their positions. So there's no need for new external money, so money flowing to stablecoins and then flowing to cryptocurrencies for a pump. It doesn't need to happen. But the truth is, unless the next rally is led by retail traders, it is unlikely that we're going to see huge stablecoin printing, huge stablecoin supply increase preceding the movement. So the odds are really small. If the pump happens because of institutional accounts, so the large funds and companies, they have their ways of directly accessing the markets without the use of stablecoins. They can use OTC desks, for example. So I consider this a lagger indicator, the stablecoins, not a preceding indicator. So I don't think you should be using that to predict market movements.
Lovely stuff. Good stuff, Marcel. That's really good to know. I took the liberty to quickly Google where Justin Sun has taken up, crypto residency, and it's Grenada. So sorry about that, guys, for the confusion earlier. A teeny tiny island where I actually was very near last week. So I guess that he paid them handsomely.
You should have paid him a visit.
I really should. I think that sort of content is fascinating. Checking out where these crypto people are residing and what they're up to. Anywho, really interesting crypto tip. Remember to stay calm. We've now got a crypto tip. Sorry, everyone. From Newsquakes, which is from Cointelegraph Markets Pro subscriptions. Let's load up the Newsquake. So this week we are talking about Gary. Gary V, I hear you say, the NFT shill? No, it's Gary Network. Which is an asset listed on various exchanges, but the biggest one would be crypto.com. Now, news, as you know, I'm sure, is what moves the crypto markets, and the Newsquake services by my esteemed colleagues at Cointelegraph Markets Pro helps traders like yourself to stay on top of those important developments. These Newsquakes are like automated alerts, almost like notifications that will notify you when market moving events happen. Thanks to these Newsquakes, Markets Pro subscribers can beat the crowds to the most important news and activities of the day. So our friend Gary, Gari, was involved in a significant price movement, as you can see on this chart, with the massive pump. As on January the 4th, a Newsquake informed Markets Pro subscribers that Crypto.com's app would list the asset. You can call this pump the Crypto.com pump. And shortly after, the price rose from 6 cents to 7 cents, which is an increase of 16.7%. You're long that and you're in the money, effectively. And so, yeah, if you subscribe to Cointelegraph Markets Pro, you will be notified of these important events. And the second feature we're going to talk about today is HXRO. Now, this is the token that was associated with the Vortex score. If you've seen the channel before, you'll be familiar with this, but it's effectively an algorithmic metric which helps you to trade more effectively. It basically compares how a token is doing currently with the social conditions in the past. A high score judges that regarding the historical data, the current outlook is bullish. So high is bullish. A Vortex score of 80 and above would fit that category and would be considered bullish. Conversely, a low Vortex score, 30 or lower, indicates bearish conditions. So high might be a long or a buy, 30 might be a short or a sell. We have an example here of where these Vortex scores played out, and it's this token HXRO, which saw a string of green Vortex scores, which, as you now know, would indicate that the price was going to go up and to the right. So the green lights lit up, and when the price was 6 cents, and it soon skyrocketed to 8 cents, an increase of 33%. You buy $100 of it, you walk away with $133 of it. It's that simple. There you go, guys. So that was our 2 Markets Pro tips for this week. You get them all for free when you pay for the subscription, if that makes sense. Now, don't forget to put some comments in the chat there. It's popping off quite a bit. Wrong Again's checked in again. How are you doing, mate? Lovely to see you. And the 4 Satoshis is telling us all to that we're shilling. Yeah, I mean, we are shilling Cointelegraph Markets Pro. That's because it is a very good service to use if you're interested in trading. That's why it's there. Okay, fantastic. Gents, that was a really interesting discussion, and a great way to kick off 2023. Have you set any New Year's resolutions, and have you broken them yet? Sam, what do you think? Did you set anything, and have you kept to it?
No, I'm not really a resolutioner. I just keep going with the goals that I have that are not dependent on the beginning of the year. So I haven't broken anything yet.
Okay, good. And I bet you haven't broken one of those goals, which I'm sure is to stack sats. I'm sure you've stacked some sats in the past 10 days.
Stacking.
Good. Marcel, are you bearish on resolutions? Oh, you might be on mute there.
Well, Joe, I don't think those 1 year cycles work. I think if you intend to do something, you should plan for the next 3 days. And what's going to happen over the next week or month or year or decade, it's not up to you. You should focus on the next 3 days only.
Okay, shoot for the next 3 days. There you go. Get those candles down to the 3-day setting on your trading view. I love the language there. Bearish on yearly cycles is trader speak for I don't like New Year's resolutions. There you go. This has been another wonderful episode of Cointelegraph Markets Pro. All that's left for us today is to choose our winner. Now, the winner this week is, how am I going to butcher this pronunciation? Umair Sami, or Hum Air Sami, at HUMAIRSAMI. You are the lucky winner of of a Cointelegraph Markets Pro subscription worth $100. Well done, mate. Please drop us a DM and we will make sure that gets sent your way. You'll be able to take advantage of the Vortex scores and other Markets Pro tools. All that's left to say is to wish you all a very happy, prosperous, and satty 2023. I'm going to start saying that now. Thank you very much, Marcel and Sam, for checking in. Any parting comments before I round off?
I'm good.
Don't chase dreams and pumps and scam coins. Stay real, stay safe.
As his handle points out, at no shitcoins. Cool. Thank you very much, everyone, for tuning in, and we will see you next Tuesday, same time. Bye.